Hi, my name is Heidi Blondin, and today we're going to do a mini-series on financial literacy. There seems to be a major gap in Canada in terms of providing financial literacy to our young people and to adults too. So what I wanted to do was share a number of tips to help people get their lives financially on track. Now, the first thing that I want to talk about is having goals. I think a lot of people struggle with the direction that they're heading and knowing what they should be doing, knowing how to get there. And so I think what I would encourage people to do is sit down and think about their priorities and their goals. What is it that they want to achieve with their life? What is it that they want to see change with their life? We all have the ability to write our own story. And so I think it's important that you identify what's important to you and start then working towards those goals by putting steps in place to help you get there. So clarity is extremely important, and I think that's the first step. The second step is to look at the current situation that you're in. Are you in a situation of sort of survival where you're just barely scraping by? Every paycheck is already accounted for and you're frustrated because you don't have any surplus? Or are you in a stable situation where you've got enough paycheck to go to the end and last you to the end of the month, and you've got a little bit of wiggle room to start thinking and planning for your future? Or are you in an affluent stage where you've got more than enough money to get by and you're starting to think about ways that you can give back to the community or leave a legacy to your family? Everybody has the ability to then change their story, either moving them from survival to stability or from stability to affluence. And that's really up to you. So you need to identify the goals that will help you move in that direction and then put plans in place to make those things happen. Now, the next thing that I would like to talk about is knowing your numbers. Knowing your numbers are incredibly important. And your numbers include everything from your income, if you happen to be in an employment situation where you have benefits, understanding what your benefits look like and making sure that you know where the gaps are in your coverage. And then I think when we look at those numbers all combined, how much you have coming in, how much you have going out, I think it's really critical for everybody to develop a budget. And I know budget seems to be a bad word. People don't like the notion of putting together a summary of all of their income and spending, because it's sometimes a very real look at their situation. And it can often be surprising and also frustrating because you may be going backwards. But I always encourage people to take the time to sit down, to put together a budget and look at the numbers, look at where you're spending your money. And I find people are often very surprised with what they discover when they put the numbers on paper. They're either spending a lot of money in areas that they didn't realize they were, or they realize that their spending isn't necessarily aligned with the things that really bring them joy. So it allows you to then take a look at the numbers and reevaluate, decide whether you want to make some adjustments, decide if you can make some adjustments to where you're spending your money, and focus the money in the areas that will help to bring your goals into reality. So what I've done is I've put on my website under the resources section, under heidiblondin.com/resources, I have a budget template. And what I'd like to do is quickly walk you through the 4 sections of the budget template. It is one of the nicest templates I've found in terms of helping people break their spending down into 4 key categories that I think helps to sort of clarify where you're spending money, how you've got the ability to impact your future, and making sure that you're not blowing up your finances. So the first section of the budget is your fixed expenses. So everything in your budget that's fixed. You've got your mortgage payment, you may have rent payments, you may have property taxes, all of the things that come out of your bank account systematically and are a consistent amount every month. And then the second section is the strategic planning section. So this is a section where you have the opportunity to take a look at your spending and decide the areas that you may want to shift your overall financial situation. So maybe things that you want to accelerate payments on your mortgage or your loan payments. You may decide you want to save money for your retirement or your kids' education. These are all of the strategic things that you're doing to change your situation. Now, the third section is a really important section. It's the planned spending section. And in the planned spending section, it gives you the opportunity to start looking forward to say, okay, Christmas happens every year. How much do I need to budget for that particular spending? Do I want to set aside a little bit of money every month so that at Christmas time it's not stressful? I've got this pot of money that I can use to spend on Christmas, all of the festivities and food and presents and things that you may want to purchase. And so making sure that you're accounting for that every month so that it's not a surprise that it comes every year. Same with birthdays, if you want a family holiday, or you're saving up for a renovation or various things that you may be planning ahead for. By setting aside a little bit of money every month for those specific desires, allows you to pay with cash and not play catch up and pay interest on those things that you want to do. So the planned spending section is very important, that you look forward, and even car repairs is a good example of something that you may want to make sure you've got a pot of money set aside for things. Eventually you will have car repairs to do, and a brake job is not really a surprise. Eventually you'll have to do one. So let's set aside some money every month to make sure that we've got those things looked after. Now, the final section is your discretionary spending. And in the discretionary spending section, after you've taken the totals from the first three sections, we're going to get a spending number. What we have left, that spending number, is the money that you can burn to zero because all of the other things in your life are looked after. So we want to make sure that we know how much money we have at our disposal every month to be able to spend. I know there's various budget templates and things. They suggest that you've got a jar for fuel and a jar for groceries and a jar for all the various pieces of your budget. But I find that aggravates people. It's too complicated. And I think that our spending ebbs and flows. And so it's not realistic to think that the same amount of money will work for each category every month. So I like to say, okay, you've got this pot of money that's your discretionary spending, and you can use that however you see fit for the month. And like I said, when the money's gone, it's gone. So there is no spending more than you've got, because if you do, you're actually then starting to cut into, for example, maybe you're spending your mortgage money, or maybe you're spending your family vacation money, or whatever it may be. So I encourage everybody to spend the time to go through, take the average of the last 3 or 4 months of spending, put it into the categories of the budget, and get a good sense of whether or not your budget balances and whether you can make some modifications to help align your spending with the things that really matter to you. Now, the last step that I would encourage people to do to help get their finances on track is to actually take a look at your net worth. Now, your net worth is it's kind of like your financial report card. It helps you identify whether or not you're moving yourself in the right direction. Are you accumulating assets, or are you accumulating liabilities and debt? So your net worth is essentially your assets minus your liabilities, and whatever that number is your net worth. So our goal is to accumulate assets. So assets are things that help to grow. So for example, investments, say you have an RSP or a retirement savings account or a tax-free savings account, that's an asset. A home is generally considered an asset because it over time typically appreciates in value. And so putting money into a home is a good investment historically. Other things that could be considered an asset would be vehicles. Although they're not a great investment, they tend to depreciate over time, but they still could be considered a part of your overall financial picture. So say, for example, you have $10,000 in investments and you have a loan for $3,000. $10,000 minus $3,000 gives you $7,000 left, which is actually your net worth. So that's sort of how you would calculate that. Now, I have a template on my website under the resource section as well for calculating your net worth. I think that that's a really good exercise to go through, just to make sure that you're continuously moving yourself forward and accumulating more assets and not so many liabilities. So I hope this section has been helpful for you. I will continue on with my financial literacy journey and provide more tips and tricks in the second segment of this mini series. Hope to see you there. Thank you.
Audio Jungle.